Hey, welcome to episode 6. I'm Dan. Have you ever wondered when you click buy why your investments just keep going down, down and down? I'm going to take you through 4 different tools very briefly which may help give you a real game changer in your investing approach. The first tool is the awesome oscillator which we see here. Second is the MACD. Third, EMA lines. And fourth, basic support and resistance levels. And to start with, I'm just going to give you a very quick overview of what each one means. So if we start with the MACD, it stands for Moving Average Convergence and Divergence, and it's essentially a trend following momentum indicator. The MACD can be particularly helpful for traders in identifying bullish and bearish patterns. And now we'll move on to the awesome oscillator. The awesome oscillator is a market momentum indicator, similar to the MACD, and when we go back on Trading 212, it'll become clearer to understand what they do. The awesome oscillator is also used to give traders buy and sell signals based on what the indicator bars are doing and how they're performing throughout the day. As with all the resources I use to make my videos, they're in the Google Doc, so you have access to them and you can go and read and do a bit more investigation at your own leisure. The EMA stands for the exponential moving average, and you can set this at whatever frequency you want, whether that's 14 days, 50 days, 100 or 200. Whatever works best for your trading pattern. And again, the key thing here is the EMA is a technical indicator which helps identify bullish and bearish patterns and when to buy and when to sell, often largely based on historical averages. And the final indicator that I like to use when setting up key buy zones and key sell zones is support and resistance. So it says here, technical analysts use support and resistance levels to identify price points on a chart where the probabilities favour a pause or reversal of the prevailing trend. On a personal level, support and resistance is my favourite tool to use, just because it brings in trader psychology, and the previous indicators don't always take that into consideration. So what we're going to do now is hop straight back over to Trading 212, and I'll show you how to set up some of these charts and indicators. So this is the default look you'll have on a chart. Essentially it's just the standard line chart. So first thing we want to do is change that to candles. And in short, a red candle means that the price finished lower than where the previous candle finished. If we look here, we can see that this candle finished around 190 and the prior candle finishing at 195. And equally, if we follow on from there, so it finished at 190 and then the next candle, which is green, finished at 194. Now we're currently looking at this from an hour by hour basis. So each candle represents 1 hour's block of trading. There are bullish and bearish signals within each candle. In this zone here, this would be described as a hammer candle. And what happened in this hour session, the price came down to 196, but then finished up at 199. So all the downward pressure was reversed and ended up finishing up. And if you want to learn a little bit more about how the candles work and what they mean, I'll put a link into the Google Doc, which is in the comments section. So the first thing we're going to set up here is the MACD. So that's, you click on templates here, and MACD should be there. And the second thing that we're going to set up is the awesome oscillator. So we click here on indicators, we go down to oscillators and then click awesome oscillator. And then you can pick whatever colours you want. I'll just go for red and green. And then that pops up here. The third thing we're going to set up is the EMA 50 and 200 lines. So you go here again on indicators, you go down to trend, you go EMA, you take the 14 out, put 200 in there and click confirm. And that gives you your EMA 200 line. Equally, we go back to indicators, we go trend, EMA again, take the 14 out and go 50. So you now have your awesome oscillator, your MACD and your EMA lines set up. So my view is that having these 3 indicators set up gives you a really good insight into what is happening with your stocks. If for example we look back on the Airbnb chart here and we go back to this point in time, on the MACD the faster moving line is the blue line. When it crosses over with the yellow line, it's seen as a bullish trend signal. So let's see what happened when it crossed over on the 2nd of Feb this year. The bullish momentum starts to take place and it moves from around 181 finishing at 219. Now it's important to say, using the MACD, I don't think you can ever get it absolutely spot on. There's always going to be a certain amount of give and take in between where you bought and where you sold. If we follow the same logic on a downtrend, we can see here that the blue faster moving line has crossed over and starts to trend down, which suggests bearish movement, before finally hitting this point here, so around 193, and it crossed over, this suggesting returning to more of a bull phase. However, one of the criticisms associated with the MACD is that it can be a lagging indicator. And actually what we see here is that both lines have tracked around the same, and then swiftly there's been a break from the faster moving line through the yellow and drop down. And it can be quite challenging to manage these, especially in the American market where you get a lot of out of hours movement. And often this out of hours movement will be referred to as gapping up or gapping down. Essentially this gap down slightly here, so you can just see a gap where it finished around 194 and then opened up the next day around 188. But again, just following the logic through, you can see another crossover again and it indicates positive momentum upwards, which can clearly be seen in the chart. So if we look now at the awesome oscillator, that shows us when there's been a lot of downward pressure, and when that starts to level out, and when there's more buyers than sells, and it starts to kick back in and trend positively. So if we start at this point here and look when the awesome oscillator went positive, you can see here that it started trending up and trading well. Now, even though there's buyers and sells in this zone, and again, it can be, like the MACD, a little bit of a lagging indicator. And what you're really looking for is this point here. So when you've got multiple green bars forming, this is the kind of point that you want to be starting to thinking about investing in this stock. It's suggesting a reversal of the previous bearish momentum and entering back into a bull phase. And as we can see, the chart correlates with that. So I quite like using the awesome oscillator and the MACD alongside each other to help give me an indicator of when to buy. So the time to buy on the awesome oscillator will not be at this point here, and on the MACD would not be at that point there. And that happened with this chart. It trended downwards, at one point hitting 173. What I'm looking for in the MACD and the awesome oscillator is quite a suppressed price and a lot of downwards pressure. However, those two things alone could give you a bit of a bum steer, and you want to make sure that you're checking that the EMA is on a positive upwards trend. So what do we mean by that? To check that EMA is on a positive upwards trend, I'm just going to zoom out a little bit. So we're currently on a 1 hour time period, and I'm going to go to 4 hours. So we can see here on the 4 hour EMA trend that the 200 line is still on a positive trend up. And this suggests to me that the trajectory for this stock is positive and it's going to keep trending upwards. So then it becomes about finding the best intraday price entry point for you. So I use the EMA 200 as a longer term indicator. But the EMA 50, so what do we use that for? We look back at this point here, the EMA 50 dropped below the EMA 200 line, which is a bearish signal. And as a result, the price dropped down quite a bit. However, here, the EMA 50 crossed over with the EMA 200 line, and this is known as the golden cross. Whilst I don't personally believe that the golden cross is a signal that you should trust for trading or investing, you can see here that when it crossed over and the EMA 50 did stay above the 200 line, it does track up and trend up nicely. If you were looking at a stock and the EMA 200 line is trending downwards, I'd probably wait, because it signalises the exponential moving average is trending down, and that's a real negative thing, and it needs to level out before you consider buying. And depending on your risk tolerance, if it does start to level out, you may see that as the perfect opportunity to start investing. So what I would urge you to do is put this setup on stocks that you're looking to invest in and start understanding whether they're moving in the right direction or not. So at the moment, I haven't added any support and resistance lines to this chart. What we're going to do now is move over to Rolls-Royce, which is a stock that I currently own, and I'll show you some support and resistance lines and try and take you through my thought process when I was buying the stock. So here we are on the Rolls-Royce tab. So I've got my awesome oscillator set up, MACD, and then the EMA 250 lines. But for this part of the video, let's talk support and resistance, which factors in more of the human and psychology factor. So you can see here that I bought a position in Rolls-Royce at 106 pence. So you could say that's just pure luck and you've entered at a really, really good time based on what the chart's saying now. However, I think there's more to trading than that. In order to set up support and resistance levels, we just take a simple horizontal line and drag it down. And what you want to do is try and find a top of a candlestick and a bottom of a candlestick. So I'd initially set it up at 104.8. And then what you can do is click on this button up here in the top right hand corner, which sets up a new price alert, which saves you checking the chart every 5 minutes. Also, because I really wanted to enter a position on this stock, I drew another line, which was the bottom of this candlestick just here. And that told me that previously there was support around the 106 level. So you could be forgiven for thinking that at this point the stock's just going to go up and up and up, and it's gapped up slightly here. We can see there was a gap between finishing trading and starting trading. So without any news or a reason to send the price upwards, you will find that there was always another opportunity to buy into a stock that you're interested in. And you don't have to FOMO in just because it's gapped up. I actually set my buy target for this when it was around this level here, around 117. And like with anything, there's always more options out there, so you don't have to buy into a stock that you're not comfortable buying into at a certain price. So depending on how patient and how keen you are to get into a stock, you may want to zoom out slightly from the 30-minute. So personally, I would use the 4-hour chart here, draw a line, drag it down, and go to here. And it's 90.5. So once I've identified this, I'm going to set up a price target of 90.5, and I'll get a notification if it ever hits that price. And if it does, then I'll just average down my stock. Or alternatively, if you get really good at using the MACD and the awesome oscillator, you may have already sold at a profit and tracked it down and traded it into a better price. So in order to understand support and resistance just a little bit more, I'm on the Nvidia tab now, and I'm going to draw some support and resistance lines just to understand exactly where you may want to enter if you were interested in that stock. So take the line, drag it down, and I tend to put it at the bottom of the most recent big candles. So we can see one here, we can see one here, and that was around the 504 level. Then what we do is take another line and draw it just to the top of the candle there, so 614.70. So once you've got your upper and lower support lines established, I think it's good to put further lines on just to understand exactly what might happen. So we can see here that the price has bounced and gone in between the lower support line and then gone back up. Now at this point here where it went through, we can see here that prior resistance turned into support and the price went up to $614 per share. However, at this point it came back down and is now testing around this level again. So it's interesting to understand if it does break through this level that the price is capped and saved at 504, because any further downtrend would be negative from there. So the final line I want to draw on here is this one, just to understand that previously it got bounced around this kind of range here. So if this does now trade up to 587 but bounce back down, you know it's hit a previous resistance level. However, what's more likely to happen is from this point, if it's trending back up, this resistance prior on these 2 points could then turn into support levels. If from this point the stock price can go through the 587 barrier, there's a good chance then it will test 614. If once it hits the 614 area, it starts to come back down, you can also use the 587 line as a mechanism to gain further support. Because what could happen is, it could hit 614, then come back down to around 587, and then kick back on again if it is rejected initially at hitting 614 again. Anyway, that's it for today. I hope you got some value out of it, and if you did, again, please subscribe. It's really important to me that I keep building the channel. If you are interested in any of the trading strategies that I mentioned in this video, please check the Google Doc in the comments section, where I will have added links to other YouTube channels explaining these strategies in far more detail than I've gone through today. Thank you for tuning in, stay safe, and happy trading for the rest of the week.